Hi, fellow traders from everywhere in crypto space. Welcome, everyone. So, for example, in the futures market, as we all know, that's what we are always doing when we're doing a 20x leverage in a very small coins. And when the price goes up by 10%, we're getting 200% profit, as shown in the screenshot on the right. So, with this insane high leverage, when the price goes up by 5%, we will get 100% profit every time. Apart from this infinite upside or insane profit, there's also downside or risk associated with this insane profit. So looking at the P&L chart on the right, when this trader keeps winning and he keeps profiting, as we see in the chart, the curve keeps going up. And one day, when this leverage trader loses once, his P&L goes to zero. He is losing 100% after that. This might not happen, but we can't guarantee that every traders would have 100% win rate. So with futures trading, without proper risk management, traders can lose everything in one off. Therefore, hedging and proper risk management is very important, while option is actually a tool that helps traders to achieve it. Anyone here has ever joined lottery or bought insurance? Actually, option is very similar to these two things. Indeed, options is very similar to futures. Leverage can also be applied to options and being used to speculate about price movement. However, option is being described very similarly to lottery and insurance as well. So when you buy an option, it's similar to what we're doing in paying for insurance every month. So in case something very bad or getting lucky, something very good happening, this trader can still be profit from it. So let's get more deeper in options. Option is also being used to construct more complex P&L curve. For example, when we look at one of the structured products in OKX shark fin, this is actually the P&L chart of a bullish shark fin. So when the price stay within a range, the user, the lenders or the trader can get 4 to 18% APR. However, when the price is out of range, so gets out of 18K to 21K in this example, this trader might only get 1% APY in return. And behind the scene, this is actually being structured by option. And OKX is also pushing structured product like this. And so it means when the price stays stable within the range, this trader would earn. Other than the shark fin product, there's also another dual investment being introduced in OKX. Basically, users can select target price at expiration. If the coin BTC does not reach the target price, the trader earns rewards in BTC. However, if BTC reaches the target price, this user his BTC will be automatically sold at target price, and he will still earn some extra rewards. So behind the scene, all of these structured product is actually being composed by options, which is also something that a normal trader can do in the option markets. In futures market, as we all know, we need to lock profit at the market because we always have some unrealized profit or loss. Even unrealized profit is high, once the market retraces, it's all gone. This example always comes, right? When the coins go up, we keep holding and we see a lot of P&L in the unrealized P&L column. But once the market retraces, it's all gone. So it's very important to lock profit. So when we lock the profit, when we close the position, the money belongs to us. However, if we keep the position open, it's all unrealized. It's just some paper money that we can look at. So it's very important that to lock profit after price moves to make sure that the profit is already guaranteed. And options is also a tool that can help us to achieve it. And in the borrow and lending market, as we all know, we are always using some DeFi protocols, or even in central exchanges, we're borrowing stable coins with coins, and so the borrowers pay yield. And the other side, the lender who is staking their their stable coins in a protocol, they earn yield from the lending protocol. So this is how the borrow and lend market works. One side borrow and pay yield, another side do some lending activity, stake their money, and they will earn yield from time to time. At the same time, actually, the perpetual market works similarly. When the long and short positions are trying to have a leverage position without sufficient money to fund it, they might move the market to be skewed, and they might bear the funding cost. So, for example, when the long positions are when the futures market price is way above the index price, the normal spot price, the long positions will pay funding fees every 8 hours to the short positions. This is how short positions earn some rewards every 8 hours. Alternatively, if the futures market price is way below the index price, short position would pay funding fee to long positions. And this is also how people do some arbitrage between spot and perpetual. When they see there's a big discrepancy in spot and perpetual market price, hence the funding rate is being greatly positive, they would buy spot and sell perpetual. Because in theory, spot and perpetual should be moving in sync. When the price goes up, both of them goes up. When the price goes down, both of them goes down. However, it is nearly impossible to predict what will happen in next day or even 8 hours later, as the funding rate could change real time anytime due to market situation. So it is not easy to lock a funding fee profit. So for example, I have bought BTC spots and sold BTC perpetual in the market, and now I'm earning a 10% APR with this delta neutral strategy. However, 8 hours later, there might be some news that have driven BTC's price go down, and so that I could be paying funding fee. So this is not something that I can safely doing for a month long or a year long. However, in options, there's also some similar strategies that that trader can earn option premium from the markets. However, it's like insurance, it's prepaid. So for example, insurance, you pay the premium first, and when something happens, you receive some compensation from the insurance company. It's similar in options. The lender can receive premium in advance. So this is also how premium works. And no matter what happens, the premium will still belong to the lender. And in the next slide, we'll go deeper into this strategy. So basically, to form such simple option strategy, there will be two things that we need to consider. The first thing is, what price are we trying to sell our spot holding at? Secondly, we need to figure out the time, the duration. When are we willing to sell it? So with this strategy, we're able to boost spot returns with options. So okay, let's go through the parameters or the things we need to consider one by one. The first thing, the take profit price. For example, I'm holding 1 BTC now, and I should always have a target price to sell, right? It could be currency is at 27K, so my target price could be 30K. My target price could be 40 or 50 or 60K. So there has to be a price that I'm willing to sell at. And secondly, there should be a time that I'm willing to sell my BTC. So I could be selling this month or next month or a year later. There needs to be a time for me to select. So in this situation, when I'm trying to sell 1 BTC at 30K and within June, so what I'm doing is I'll go to the options market and pick a strike price 30K and pick an expiration date 30th of June and sell call of it. Sell call. And the outcome will be if BTC stays under 30K in 30th of June, I will be earning a premium of around 0.022 BTC. And I'll be continually holding and accumulating BTC, and I can keep rolling. I can, in June 30, if BTC is below 30K, I can sell a call again. So I can choose another target price, and I can choose another expiration date. I can choose another time to be selling at while I'm continuing holding BTC and earn premium from time to time. On the other hand, if BTC is above 30K in June 30th, what I will have is I will have a premium of 0.022 BTC, and economically I will be selling BTC at 30K. So I will be selling at 30K. So even if the price goes down afterward, it's okay. I'll still be selling BTC at 30K. The downside is if BTC has moved to 60,000 in a month, then I'll still be selling BTC at 30K. I will not be able to get the profit of BTC from the price movement from 30K to 60K. However, I'll still be earning a 600 USD of premium, which is around 20% in APR. So this is what options trader use to hold their lock profit when price goes up, so that it's realized, and also earn yield while the price is not going up at all. So for example, in today, I'm holding 1 BTC. I have two choices. One choice is I will place an order in the spot market to sell it at 30K. Another choice is I'll put it in the option market and sell a call with 30K as strike price. So if the price goes way up, for the spot guy, he will be able to sell BTC at 30K. However, for the option guy, other than selling BTC at 30K, he'll also be able to earn premium from it. If the price stays below 30K forever, the spot person will not be able to sell his BTC, and his order will just stay there forever, and he's not earning anything. However, for the options person, he'll be able to earn a 20% APR while his BTC is not being sold. So this is how we can boost spot returns with options. And after introducing the basic concepts of option tradings, SignalPlus and OKX are actually co-hosting an option trading competition, King of Option, a week later. And there will be 4 types of trading groups, 4 types of competition in this series of competition. And the general rule of the competition is trading volume. So the more you trade, the more volume you trade, the higher rank or more benefits you will be getting. In this competition, you can join anytime, but of course, the earlier you join, the more you can trade, so that it's more likely for you to win in the competition. And there are different types or formats in this competition. As you see, there are 4 types, and in theory, traders can join all of them at the same time. For the individual competition, there is a prize pool of up to 45K to be shared. And there are actually two groups in this individual competition. And for VIP group, the number 1 guy, the winner, can earn up to $5,000, while the elite group can earn up to 10,000 USDT. To join the elite group, you need more than 100K USDT worth of assets in your OKX account. So if you want to, if you have less than 100K USDT of balance in OKX, it doesn't matter. It's still okay. You will still be able to join the VIP group with to earn up to 5K of prizes. In the individual competition, the more you trade in volume in the options market with the SignalPlus dashboard, the higher the rank you will be at. And there are some qualification in the individual trading competition. To be qualified for ranks, traders need to be trading for 10 days. So there needs to be 10 days that you make at least one trade, executed one trade in the market, in the options market. If you're not, then you will not be able to be qualified in this ranking or prizes. And secondly, for team competition, leaders can actually invite their friends or their fans, or even join some teams from KOLs, or to form a team to compete together. And the rule here is quite different from the individual competition. The rule of team competition is to have more qualified members in the team. To be a so-called qualified members, a trader needs to have over 500K USDT volume in the options market. So the more qualified team members a team has, the higher rank it will be able to achieve. And for the prize, there will be up to 30,000 USDT worth of prize pool. And leaders can get 30% of the prize in the corresponding rank if they win, and teammates will share 70% equally. So to win in this team competition, leaders need to find as many teammates as possible to compete together, so that they can achieve a higher rank in the. So to start this, we can invite friends or some fans or some followers, or if you don't know any friends that trade options, feel free to join our communities and ask for a team to join and compete together. The third type is the lottery after the competition. When a trader has met a volume requirement, you will be able to join this lottery, and there will be a 37,000 worth of prizes to be distributed to all winners, and there will be 95 winners, which is quite a lot in terms of a lottery. So there is a very, very high chance to be able to win a spot in the lottery. And lastly, there will be a bonus competition after all these series of competition has ended. And if a trader has met the requirement to join a volume requirement to join the bonus competition, he will be able to join automatically. And the qualification is the same as individual competition. Needs to be having 10 trading days that consists of one executed trade each day. And again, it's the same as the individual competition. The more volume you have traded, the higher the rank you will have. And the price here is to share up to 3,000 in the prize pool. And lastly, to register in this competition, you can visit the site as follow to join the competition. and it will be also in the social media and the OKX website. Will also be able to find this information. And lastly, these are some of our social media channels that you can follow to look for some more information about options trading, to know more about how can we profit, or what are profit from the options market, what strategies can we use in the so that to profit in the volatile or very stable market like we are experiencing now. And we are also having some trading classes around options trading from time to time in the option, which is called Option Labs, in the Discord channel. So if you're interested, you can also join and look for the next session to be joined. And thank you everyone for joining. This is the end of this session. And for the next session, we will be talking about how can we take advantage in the options trading competition, like what is the tricks or what's tips to achieve high volume. And thank you everyone for participating in this session.